You're watching Business Incorporated live on Channel Television. Coming up in the next 25 minutes. International Monetary Fund has retained its growth forecast for Nigeria in 2023 at 3.2%. East Africa Community eyes digital identification systems to solve its security problems. And Egypt's Suez Canal revenue rose by 22.3% in the first 9 months of 2023. Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets now, starting with global oil markets. I will see that oil prices drifted near 3-month highs today, with investors cautious ahead of an expected Federal Reserve rate hike later in the day. Joining me now for analysis is Uche Paragon, senior commodities trader, CCI traders, joining me via Zoom. Great to have you on the show, Uche. So, yeah, all investors now watching out for what the U.S. Fed is going to do next with rate hikes. But what are the charts telling you about price action for oil?
Hi, good afternoon, Williams. Here in our trading firm, the chart is still bullish, but as you can see, as you have just said, this afternoon and early in the morning, the price dropped with about 1%. Brent dropped with about 1.03%, and the WTI dropped with about 1.035%. Because of investors are expecting the outcome of the Fed interest rate figure. One thing about it is that if the interest rate report this afternoon become high, like what we call hike, if they release hike interest rate, it's most likely going to discourage investors by investing more in oil, and this may affect the price of oil to drop, because higher interest rate will definitely affect the demand choice. You know what I mean? So, not only that, we are also expecting another report this afternoon by EIA to give us what is most likely to be the report of the inventory build. We are also going to look into that factor to see what the supply ratio will be. These are two factors we are looking at now. One, the interest rate policy or the interest rate report coming up this afternoon, and the inventory report also coming up this afternoon. So we'll be able to see what the figures are and how we can be able to analyze them and implement it. But I'm thinking that the price may drop if the interest rate is high, honestly.
Right. Well, we'll keep watching out for what the U.S. Fed, does next. But we keep seeing a lot of volatility in the oil and gas market. And I want you to tell me, how can individuals and private companies trade on this market? But because it's quite volatile, I know some traders are making gains right now.
Yeah, it's volatile, but volatility is needed in the market. That's what the investors want. And it's also a stable commodity global. As you can see, the price of oil affects the price of every other commodities in the market. Even in a national level, you see how the prices fluctuate and how the higher oil price affect the price of other commodities. Now, this business, investors trade mostly on the price. They trade on the price value of it. As you can see, the Brent currently is trading around $82 per barrel. This has been the highest so far. And the price started rising around when it was around $73 per barrel and rose to about $82 per barrel. Now, there are two ways investors make money in the oil industry. Most investors trade on contract for difference, some trade on future contract. These are the two ways. Oil is traded on contract, of course, you know that. Now, and the few investors only take delivery. Mostly those who deal on few future investors take delivery. And majority of investors globally, they only leverage on the price movement, because the price determines how profitable or how profit they will make in the market. For example, assuming you are holding $100 contract in oil, and the oil move from one barrel to 2 barrels, that would be about $15,000 profit from $15,000 profit, because the oil is traded based on the value prices, and each of barrel contains about 150 liters of crude. So these are the ways investors make money in oil. Now, as the market has moved from $70 plus to $80 barrel, that's about 10 barrel difference. So multiply it according to number of liters that's been traded, over 150,000 barrels. These are how investors make money, and these monies are paid in cash on most cases. Again, access to this instrument is done through different commodity brokers and different exchanges across the globe. This is the advantage of globalization, which is being leveraged by digital technology. It is powered by digitalization. Now, it gives investors global right to be able to play on this price and be able to connect to different intercontinental exchange through their local and international brokers, and they're able to connect and make money playing on the global level. And our own firm, we trade on different liquidities because this has given advantage for a lot of people in the sense that the money you are making in your own country may not be coming from the same country. Rather, it will be coming from a different liquidities. That is not even in the same jurisdiction where you are. These are the ways investors make money through commodity trading.
I'm talking about investors now. I know there are also, retail traders out there. What kind of education do they need at this point to be able to grasp, the knowledge needed to make profit in this market?
The basic thing they need is awareness. As you can see, a lot of investors don't know how these things interact. That's the truth. So that's also why we used to have programs like Energy Without Borders initiative to let people know how these things is done and how they can be able to leverage on globalization. The same way it is done in education. You see how education system has changed. So the countries who have an advanced system, they can be in their own country and take students from another country and they make money through education. That's called globalization. So education matters a lot in this business. Educating people how you can play on the same global oil market and make the same make similar amount of money. It just based on education. So that's why we constantly educate people through different channels, different programs on how it is done and how they can be able to understand the trend of this of the present day reality.
I can imagine, quite interesting, and definitely these prices do affect, how much you buy your PMS in the country. So we're hoping that the prices actually stabilize soon. Thank you so much.
Yes.
Thank you so much. That's Uche Paragon, Senior Commodities Trader, CCI Traders. Great having your perspective today. Thank you.
Okay, thank you so much.
All right, now from there, let's head on to another market now. That's on the African continent there. Let's take a look at what's happening with the NGX. This time we see the NGX that's trading down about 0.66%. Yeah, quite a big drop there we're seeing, 0.66, but still holding on to 65K. Level in South Africa is also negative. It's down 0.25%, 77,000 for the all-share index. Other markets we track, North Africa there, EGX 30, marginally down at intraday, 0.08%. We'll see a big drop in Kenya there, 2.49, almost 3%, losing the 110 points level for the all-share index. So that's how it's looking on the markets we track on the African continent. Let's take it now to the UK. We have Juliana standing by. Right there. Well, we'll try and get Juliana later on, but let's take a look at what's happening with other markets now. In the Middle East, you see it's also about negative sentiment in the Middle East. Right now, markets we track there, we see just the UAE is still positive, right there, 0.09%. That's for Abu Dhabi. Dubai index, that's up 0.65%. Other markets we track in the Middle East, we see the Saudi Arabia index there's the lone loser, 0.14%. at intraday, and we see the Qatari index, 10,306 points. That's up 0.25%. All right, let's head on now to the UK. Let's try and get Juliana back now. Good afternoon, Juliana. Great to have you. So, yeah, you were talking to Ini earlier about the NatWest boss resignation. Any update on that now?
Good afternoon, Laddie. Well, this is a major story. We'll start with the headline, of course, which is quite rightly, as you said, earlier this morning, very early this morning, Dame Alison Rose, who is still currently the CEO of NatWest Banking Group. She announced her resignation following admitting a series of errors because she sat next to a BBC journalist at dinner and disclosed some personal information, inaccurate personal information about Nigel Farage, who was once the former UK independence leader, very known for pushing the Brexit referendum, a highly controversial figure, but certainly not somebody who most people in the country believe should have his bank account closed because of his personal views. And that is the genesis of this story. It's been running in the press in the UK for the past couple of weeks. If you're watching from the UK, you're certainly going to be familiar with this story. It started off as what I think most people in the public thought was just a Twitter spat between Nigel Farage and Coutts. Now, Coutts is a very well-to-do bank. It's a personal bank, but owned by NatWest. Some of its clients include King Charles III, as well as other high net worth individuals. Now, Nigel Farage used to bank with them. He received a 40-page letter basically explaining why his bank account would be closed. And the sum of it was his ethos, his visions didn't align with that of the bank. And so there was a back and forth on Twitter about this letter. Then it was presumed that perhaps Coutts had decided to close his account because the money that was in there didn't reach the threshold of £1 million. And that was the information that we now know was given to a BBC journalist by Dame Alison Rose. It then picked up, she apologised, but then I believe yesterday we kind of realised we got a hint from Jeremy Hunt, the Chancellor of the Exchequer, as well as the Prime Minister, that they were just not confident in her position. And the reason why they stepped in is because the public taxpayer are paying for the bank. I believe 38% of NatWest is still owned by the government. This goes back to 2009 when Royal Bank of Scotland was bailed out by the British taxpayer. So there are layers upon layers of this. It's reached Westminster because, of course, again, as I reiterate, a lot of people just don't believe that your public views should lead to your bank account being closed. Now, there are regulations and rules across the world about politically exposed persons and what happens to PEPs if some transactions appear to be suspicious, but not just because you put out salacious tweets, not just because you're a highly divisive figure. And so there are major issues that are going to be coming out of this resignation, not just for NatWest. Of course, you can imagine their share price has dropped significantly. It's a major loss to the city, Dame Alison Rose. She had only been at the helm for about 4 years, but she started off at NatWest as a graduate trainee back in 1992. She's been at the bank for 3 decades, and she's one of the only senior financial execs that we have in the City of London. So her loss is a huge issue for the bank, but then it's also a huge issue for the British government now because Andrew Griffith, the city minister, has had to haul about 19 lenders for a Zoom meeting talking about some of the issues that have been raised because of the Nigel Farage scandal. And Nigel Farage, as to be expected, laddie, he's all across the media today. He's not happy that Alison Rose has stepped down. In fact, he is asking for every single member of the NatWest board of execs to step down. So yeah, this story is going to rumble for, I think, a few more days to come.
Yeah, definitely a few more days, and we'll keep tracking and getting more updates from you on that. Thank you so much, Juliana. Thank you.
Thanks, Laddie.
All right, now we'll take a break now. When we come back, we'll get more stories on the African continent. That's in a moment. Do stay with us. This is Business Incorporated. Check now Berlin. Now, City IMF says Germany will suffer the G7's only contraction this year. It expects the German GDP to decline by 0.3%. Joining me now is Chiponda Chimbelu right there in Berlin. Thank you so much for joining us, Chip. Can you tell us more about the IMF forecast?
Well, the International Monetary Fund is downgrading its forecast for the German economy to 0.3% this year, and things don't look much better or like they will be great for 2024 either. The IMF expects the German economy to grow 1.3%. Now, that won't be enough to make up for the declines that will be seen this year and, of course, that were seen last year. Germany is still struggling with the fallout from the war in Ukraine. The switch from Russian energy imports continues to linger, and it is the manufacturing sector which has borne the brunt of the energy crisis. Unfortunately, the worst may not be over. The latest IFO Institute survey of purchasing managers showed that industrial orders dipped. That raises the likelihood of a longer recession for Germany, which has already been in recession for 2 quarters. And there are even more headwinds with the tighter monetary policy in the Eurozone and lower demand from China. China is Germany's largest single trading partner. The slower growth of the Chinese economy could affect Germany, which of course relies heavily on its exports to drive its economy.
And how does the German outlook compare to the rest of the world?
The global GDP is expected to rise 3% this year. Now, that's actually higher than a previous forecast of 2.8% in April. That's partly because the US government was able to avert a government default by raising its debt ceiling. And it also managed to prevent a crisis in the banking industry by intervening during the collapse of Silicon Valley. But despite the fact that the global economy is expected to grow, it is still much lower than the average growth in the 2 pre-COVID-19 decades when the global economy was growing around 3.8% on average. High interest rates, which may help reduce inflation in many countries, will weigh on economic activities around the world as well. The global economy would also or could also face additional risks from the ongoing war in Ukraine. Russia has said it won't be extending the Ukraine grain deal, and until July, it had been allowing grain exports to leave Ukraine via the Black Sea. That had helped push food prices lower. But now that that has changed and Moscow's latest decision has caused wheat prices to rise, that will be, of course, a terrible effect, of course, on food prices, as we are seeing. Climate change and its effects as well will also be an issue to look out for, the IMF says, but it still says that it is inflation which is the biggest threat to the global economy.
All right, thank you, Chipanda Chimbelu, right there in Berlin. All right, let's take it straight to the U.S. now. So U.S. stock futures fell slightly today as investors weighed a batch of corporate earnings from major tech names and geared up for the Federal Reserve's latest interest rate decision. Well, let's get a summary of yesterday's close from our correspondent, Maria Bird.
The NASDAQ led the U.S. stock market in gains on Tuesday, and the Dow Jones had its 12th day of a winning streak. The NASDAQ was up by 0.6%, the S&P 500 up by 0.2%, and the Dow Jones up by 0.1%. These are all positive signs for the U.S. economy, even though many investors are a bit concerned about the 2-day meeting of the Federal Reserve. It is expected that interest rate hikes will happen before the end of July. Even though this is expected, many are still hopeful that we could see just a few more weeks of interest rate hikes being at bay.
And let's take it quickly now to Asia. There we see markets in Asia not looking so bad, but closed mostly in the red today. We see most stocks we track right there. See right there behind me, the color is all red. Most parts of Asia there. Nikkei down 0.04%. The Kospi is down big, 1.67% close today. The HSI index, 19,365 points, also down 0.36%. Other markets we track there, we see the S&P ASX 200 in Australia, 7,402 points. The lone gainer there, 0.85%. That's what we're seeing right there in Asia. All right, now let's take a look at that grains market now. See, the International Monetary Fund has estimated that Russia's exit from the deal allowing Ukrainian exports via the Black Sea could drive global grain prices up 10 to 15%. Meanwhile, the Food and Agriculture Organization, they've stated that the rising illegal, unreported and unregulated fishing pose a threat to food security in West Africa. Let's talk to Ted George now, founder and chief narrative officer, Cleo's Advisory Limited in the UK. Great to have you on the show.
And good to be back, Laddie.
So quite a gloomy forecast there by the IMF. And, looking at Russia's body language now, is there any chance that Russia might get back in the Black Sea grain deal?
Well, it is possible. I mean, negotiations are continuing. There's a lot of mediation efforts. But I think the thing to bear in mind is that we have definitely left the previous deal behind. When that was on, Ukraine was able to export 80 to 90% of what it had been exporting before the year, before Russia invaded, and markets kind of stabilized a bit. But Russia is now directly targeting grain infrastructure, grain silos, port infrastructure. So it's really caused a jitter to the markets. That's why we've seen already wheat prices are up by more than 10% to around 750 barrels a bushel. But we should remember that is well below where they were when markets panicked back in February 22. It went up to nearly 1,200. So there's still a long way to go, but this is the last thing the world wanted because we've got really high inflation and really high food prices.
Ukraine can still get out grain through other sources.
It's true, but remember, I mean, the entire network and the export infrastructure had been set up to export out of these three major ports. If you just say, well, we're going to put all of this grain on rail or on road, what about all of the traffic that normally uses it? You can't just suddenly make space. Most of the infrastructure in Europe is heavily overloaded. And there have been issues as well with bordering neighbors of Ukraine. If you think of Poland, they're saying, we don't want huge surges of wheat coming into our country. What about our own wheat farmers? They want to be able to sell at a decent price. So there's quite a bit of local politics to manage as well as logistics. But I think the thing to bear in mind is that most of this risk has been priced in by the international market. There are many other alternative sources now for grain other than Ukraine and Russia. It is hurting the market, but nothing like it did a couple of years ago.
I will see the FAO there have said that rising illegal, unreported and unregulated fishing is posing a threat to food security in Africa. That's now for the sea. What do you make of this?
Well, I mean, it is a huge problem, particularly for West Africa, this question of illegal fishing. Something like 20% of all the illegal fishing in the world happens in West Africa. It's been described as an epicenter for illegal fishing. And this has a huge cost. I mean, they estimate as much as $10 billion in lost revenues, either to locals or to local governments as well. And so I think the real problem here is that it impacts the populations in many ways. One is the loss of business. If you think of canoe fishermen, their incomes have fallen by at least 40% in the last 10 years. But also there's this whole thing about the fact that most coastal communities get nearly all of their protein from fish. And this overfishing is severely damaging the local stocks and populations. So it means it won't only have an environmental impact, it's going to have a social and economic impact too on the Africans living in West Africa.
All right, so much to unpack there. Thank you so much. Always great to have you. I'm Ted George, founder, Chief Narrative Officer, Claire's Advisory UK. Thank you.
My pleasure.
All right, let's take a look at some stories now. See, the IMF has retained and expects Nigeria's economic growth to decline this year and in 2024 due to insecurity issues within the oil sector. IMF disclosed this in its latest World Economic Outlook Update report for the month of July, which has not changed from the Washington-based lender's projection of April 2023. According to the International Finance Institution, Nigeria's economy will grow at 3.2% in 2023 before declining to 3.0% next year. And countries in the East Africa region now, such as Rwanda, Kenya, and Uganda, Tanzania, are moving towards adopting digital identification systems to modernize personal documentation. Rwanda is taking significant steps by drafting a bill to govern the issuance and use of digital IDs, with the potential to receive financial support of $40 million from the World Bank for the initiative. The implementation is expected to be completed within the next 3 years. According to a report published by the Central Bank of Egypt, during the first 9 months of fiscal year 2022-2023, Egypt experienced significant growth in revenue from two key sectors, as the Suez Canal revenue, which rose by 22.3%, reaching $6.2 billion between July 2022 and March 2023, compared to nearly $5 billion during the same period a year earlier. Similarly, the tourism sector saw a remarkable increase, 25.7%, during the same period. However, it wasn't all positive news, as remittances from Egyptian experts dropped by over 26% during the same 9-month period. All right, those are the stories making the headlines on the African continent, and that's how the markets are looking at intraday, and the markets we track. Thank you so much for watching. I'm Ladi Williams. I'll see you again next time. Bye for now.